So, Michelle, you and I have clients and we diversify their portfolios, and I'm sure you have some emerging market ETFs. I do, and they're a small component. So I oftentimes don't really look at it as frequently as I do other positions. But recently, you've seen a lot of money flowing into the emerging market funds. What do you attribute that to?
I attribute that to the fact that you've had a lot of technology companies in that part of the world that are beginning to get traction. And so those companies have been cheaper, those technology companies in emerging markets have been cheaper compared to the United States markets in that particular sector. And so you've seen money flow into go back into emerging markets. But I would make the case that, yes, that's a good reason to own them. But at the same time, those countries are growing faster than ours. They have a much younger populations than we do in the United States and in the developed part of the world. And it's important to have exposure, whether it's popular or not, because those countries are becoming a bigger part of the world GDP. And you don't want to just own the United States in isolation, especially when they're putting more emphasis on AI and technology as well. I think we'll continue to see them do well in those companies just like us.
Yeah, and it always drives me crazy that China, which is the second largest market in the world, is still considered an emerging market. I don't know, how that's the case. But Andrew, why don't you take us through your emerging market world?
Yeah, that's a great point, and that's a great argument that, with the WTO, the World Trade Organization, that China should not enjoy the benefit as an emerging market label, right? And that's how they have gotten all these incentives that were really not fair, as the second highest economy or the largest GDP economy in the world. That's a great point there. But the inflow that we saw recently is the offset of the outflow that came out of emerging markets, in the beginning of the year. So this is just a rotation, if you will. And I think this is due to the valuation and looking at, the US markets, it is quite pricey. You can say it's priced for perfection. And you can also say and put an argument that, this is still not proven, right, when it comes to the AI infrastructure build. So there are the believers and there are the non-believers. And the non-believers are looking for a different way to diversify for the clients' portfolios. And in emerging markets, it's a reasonable one that is well diversified. In addition, when compared to the developed non-US economies like Europe.